Dear friends, welcome to Nifty Indicators. Once again, I'm Shanoy here to talk a little about options. Options are originally meant to be a mechanism to hedge against the erosion of value of assets we are holding. Options derive their value from the spot price of the underlying. As such, it's only a derivative and isn't a direct instrument. Trading in options is quite risky and is not suitable for all. Trading in options is quite speculative in nature, and that is why we need to trade in options only with the money that we are ready to lose. Options involve risks and not necessarily suitable for everyone. Option trading can be speculative in nature and carries substantial risk of loss. That is why invest only with the risk capital or money that you can lose. Options are contracts that grant us the right, but not necessarily the obligation to buy or sell an underlying asset, index, or a share at a set price on or before a certain date, that is, the expiry period of that series. In simple words, it's a contract where you make a small down payment to reserve your right to buy it for the set price on or before the particular date without having the compulsion to exercise your right. Having said that, let us add that options trading could be risky and as such speculative in nature, and the silver lining is the risk is limited only to the price of the option that we have already paid. Dear friends, before I end, I request you to kindly log into our website niftyindicators.com, post your views, read and comment on other people's views, and if you are interested in learning the trading and how to make money from this market, kindly feel free to call me